earnings. You are upbeat on 2025 earnings performance. What do you see ahead in markets more broadly?
Yeah, I mean, I think now that Trump's in office, especially out of the U.S., we are a little bit more bullish on the U.S. stock market or the S&P 500 over the TSX at this time. We look back to how the markets performed last time Trump was in office, and we did see strong performance overall, right? We saw the S&P 500 actually return over the 4-year period over 80, I believe it was around 86% return. The S&P 500 was, or the TSX, Canadian stock market, was up just about 30% or 35%. So for us, we see more upside, especially out of U.S. stocks and U.S. businesses, also looking at corporate profitabilities. But I mean, Trump is also pro-business, right? Last time he came in, looked at cutting corporate taxes. We saw those decrease from 35% or 31% down to 21%. So again, that significantly boosted the bottom line of these companies that were invested in out of the U.S. He's talking about too, Fed and looking at everything with the U.S. versus Canada and the Bank of Canada. Our expectations are that we will continue to see additional rate cuts from Canada. We think maybe 1.25% of cuts through 2025. Again, GDP is slowing, inflation is below 2%. The economy is slowing, whether we are in a recession right now or not. That is lagging information that we won't know until we've actually been through a recession. Whereas the Canadian or the U.S. consumer is still strong, right? They're booming. The consumer is driving the markets. They're still outspending. So Fed changes, even for Fed cuts, were about 1% expected for 2025. They've reduced to anywhere between 25 basis points to 50 basis points. Now there's about 16% chance there's no Fed cuts. We just think that there's still going to be cuts out of the U.S., just delayed, maybe looking at summer. So again, we are still bullish, thinking there's more momentum out of the U.S. We are overweight U.S. from a geography standpoint and investment standpoint. But when Canada does hit a bottom and we do see interest rates come down and spending start boosting the Canadian economy, we would likely look at pivoting from overweight U.S. to opportunities in Canada at that time. So I'm thinking if everything is based on the data we have today, could be around Q3, Q4 of this year. But again, there's a lot of economic data. There's a lot of what ifs, especially with Trump in office, potential tariffs. I don't likely see those coming into place. We have one more year until Trump's last NAFTA turned into the USMCA, until that's up for renewal. So I think there's a lot of talk right now on what ifs, but not a lot of action. And I don't see tariffs at least significantly coming in this year. And if they do come in this year or next year, I think it would be about, maybe 5%, 10%, if that. But again, it would also hurt the U.S. economy as well. And looking at the dollar, right, the U.S. dollar, where it is, we hit over 145 last week, or 144. And now, we could see a little bit of a short-term pullback there. I do still see additional weakness in the Canadian dollar, but we have seen a lot of that priced in, knowing that the U.S. will be pausing on rate cuts and Canada will be continuing to cut. So that has impacted our dollar and brought it down to the levels that we're at right now. You're seeing 1-year dollar down about 6.3% for Canada. And that could also stimulate additional spending from external partners like the U.S. and other countries to bring money into Canada to help also boost the Canadian economy.
You don't seem worried about the fact that the U.S. markets had 2 consecutive years of 20% plus performance.
Yeah, we looked at the data too, and again, the past never predicts the future, but we have a lot of data. We analyze a lot of information, and usually historically, after you've seen 2 years of consecutive double digits or 20% growth, on average, the third year, the markets actually are up double digits, up around 13.5%. So we are still bullish. You are seeing across the board, economists, analysts projecting about the S&P 500, the middle of the ground there is 13%, some a little bit higher, some a little bit lower, but that is still positive. And also 1 year after a U.S. election, markets are also up double digits. We've seen about 16%. So again, reasons why we are a little bit more bullish on the U.S. Stock market for 2025. I do think we're going to see some volatility though. So the past 2 years have been a little bit more muted volatility. We haven't seen too many sell-offs. So I wouldn't be surprised to see, a 10% correction, a few 5% corrections throughout the year this year.
That's Brianne Gardner and her outlook